Hey everyone! Today we're diving into a major financial move by HIMS, which recently secured $870 million in funding at a 0% interest rate. This funding isn't just about expanding globally, but also about investing in AI, which is a significant step for the company. Let's break down how they pulled this off and what it means for their future. First off, it's important to note that HIMS can't really afford to do a new share offering right now. Their stock is trading at a level they consider seriously undervalued, and issuing more shares at this price would only dilute their value further. They still have a $50 million buyback program that remains largely untouched, signaling their belief in the long-term potential of their stock. But if you're a company looking to raise funds without diluting shares, what do you do? The answer here is convertible bonds. Convertible bonds are a smart alternative for companies like HIMS that want to raise funds without immediately diluting their stock. Here's how they work. If the company's share price rises above a certain level by the bond's maturity date, the bondholders can convert their debt into equity, effectively becoming shareholders. However, if the stock doesn't hit that target, the company can just pay back the bond in cash, avoiding dilution altogether. For HIMS, the conversion date for these bonds is set for May 19, 2028. With a conversion price set at $17.67 per share. This price is about 37% higher than their current trading price of around $51.40. If the share price reaches or surpasses this level by 2028, the bondholders can convert their debt into shares at this premium, potentially making a substantial profit. If the share price falls short, HIMS will simply roll over the debt, which is a common practice for companies managing their finances strategically. Now, you might be wondering why investors would be willing to buy bonds that offer 0% interest, especially in a high-rate environment. The answer lies in the built-in upside potential. Convertible bonds are essentially a way for investors to bet on the company's future growth without the immediate downside of equity risk. In this case, investors believe HIMS will be worth significantly more by 2028, making the conversion option potentially very lucrative. HIMS took this strategy a step further by purchasing capped calls alongside this bond issuance. These capped calls effectively limit the dilution risk if the share price skyrockets. For example, if HIMS stock shoots up to $150, the dilution impact for the company will still be capped at around $89.95 per share, thanks to these financial instruments. This approach is similar to a call credit spread in options trading, where the company has protected itself from excessive dilution, even if their stock price soars. The demand for these convertible bonds was exceptionally high, with the initial offering of $450 million nearly doubling to $870 million due to investor interest. This shows strong market confidence in HIMS' long-term prospects, despite the 0% interest rate. Investors clearly believe that HIMS can grow its valuation significantly over the next few years, making the potential for equity conversion worth the risk. So, why is HIMS raising this much capital now? The main reason is to fuel its global expansion and strengthen its technology capabilities, including AI investments. The company has been growing at an impressive pace, reportedly over 100% annually, which is a significant advantage in a competitive market. This new funding gives them a war chest for strategic acquisitions, R&D, and building their technological infrastructure. Having a large cash reserve also makes HIMS more resilient, providing the flexibility to weather financial storms, invest in cutting-edge technology, and seize market opportunities as they arise. It also positions them well for potential strategic acquisitions, similar to how tech giants like Google and Meta made smaller-scale acquisitions early on to bolster their core businesses. Overall, this move seems like a calculated bet by HIMS on its future growth. By avoiding immediate dilution, managing its debt smartly, and preparing for a tech-driven future, HIMS is positioning itself as a strong player in the digital health space. The company clearly believes that its rapid growth will outpace any potential financial risks, making this $870 million a potentially transformative investment. That's all for today's breakdown. If you found this insight helpful, make sure to like, share, and subscribe for more financial analysis and updates. Until next time, stay tuned.